Welcome to Bank on It, Conversations with First Seacoast Bank. Today's topic, the role of community banks in temporary times. I'm your host, Chris Islam, and here with me today is Jim Brannen, Chief Executive Officer of First Seacoast Bank. Today's episode is part one of a two-part series. Jim, welcome to the program.
Thank you, Chris. Happy to be here.
How did you first come to First Seacoast Bank?
Back in 2007, I was a finance officer for a small rural hospital up in northern New Hampshire. Former associate of mine was, when I was in banking prior to that, was president of what was then Federal Savings Bank, was how we were branded back then. Asked me if I wanted to come down and start as the CFO of Federal Savings Bank, which I did in July of 2007, and it's gone from there, thanks.
And what interested you in joining the bank initially?
Yeah, I think it was both a personal and a professional opportunity. One, to get back into banking. I'd been in banking for about 21 years before I went into healthcare. I was in healthcare about 3.5 years, and even though both industries are very highly regulated, they're also very different. And so my subject matter knowledge in healthcare was good but not great. It was stronger in banking. So there was a professional level of comfort getting back into banking. And for my family, we were in a very rural area up in the northern part of the state that didn't have some of the educational opportunities that the Seacoast has to offer. So it's obviously, personally, it was a desirable place to live. Although my kids would have disagreed at the time. My daughter was going to be a junior in high school. My son was going into the 7th grade when we moved down. So I wasn't very popular, but all's well that ends well. It worked out great. They've both done very well.
So you started in banking, then you went into healthcare, and then you wound up back in banking?
Started in banking in February of 1984. And I was at the same organization that grew and expanded for just under 21 years. Then I was approached by what's called a critical access small hospital up north to ask if I would go to work for them, and I did, to get a change. And it was a good experience. I learned a lot. I was exposed to what I didn't know, which was a lot too. But it was a good experience, and I worked with some great people and learned a lot, but then had the opportunity to get back into banking, and I'm glad that I did.
Were there parallels between the two jobs?
In a lot of ways there are, in a lot of ways there aren't. Even though they're both highly regulated, I would say the regulatory environment in banking is far more predictable, and I guess you would say stayed, S-T-A-I-D, it's stayed, in that it's the rules are well defined and the scope of regulation is well defined. In healthcare, it's less so. You'll have what they call CMS auditors come in, or Joint Commission auditors come in healthcare, and they're auditing and have rules regarding safety of the premises, negative pressure in the operating room, and then financial guidelines. So they're all over the map. So you can get dinged because you don't have the right inspection dates on your fire extinguishers, and you can also get dinged because you're overbilling or something like that. So it's a very the folks in healthcare earn their money because it's a very difficult environment.
Yeah, that sounds like a unique challenge for sure.
Yeah.
So you wound up at First Seacoast Bank. What do you appreciate about First Seacoast Bank with regard to the role it plays in community?
Yeah, I think so. It's a combination of the culture at the organization and the culture in the community. I mean, Dover and Portsmouth, Rochester, Durham, Barrington, these Seacoast communities that we serve in the areas around them are just great communities. They're doing well. Everybody's welcoming, participates in the chamber activities and fundraisers, and our staff embrace that. I can say that at First Seacoast, the culture with the employees is my favorite part. It's the people. And when you go somewhere, you're readily recognized, not only as an individual, but also working for an organization that supports the communities in a big way.
How would you say the culture or community at the bank has changed since you started in 2007 versus where it is today?
Yeah.
And what type of role did you play in helping to shape that? Yeah,
I'm not sure how much I had to do with it, but I think one of the biggest things is we went through at Federal Savings Bank was from during my time, and prior to that, with a significant transition on a lot of fronts. Demographically, our customer base and the Seacoast was at that time was probably on average. This is not a statistical fact. This is just my intuition. Was an older community, and our employees who had been there a long time, providing great service from our board on down, we're an older group that through natural transition, we got younger. We got younger internally at the same time the community did. And that was a big factor in allowing us to adapt to the rapidly changing banking environment from a technology systems standpoint. And so we've been able to leverage that youth transition both in the front room and back room, and at the same time that our communities have gotten younger and our customer base has gotten younger and their expectations change accordingly. So that's worked out pretty well.
Nice. Let's talk, this will be sort of a higher level question, but let's talk about the role banks play in society.
Sure. Well, that's a big question, Chris. It really is. It's, when I started, and I'm going to wax philosophical on you for a minute.
Yeah.
Okay. So when I started in banking in '84, we'll have to confirm these numbers, but there was over 18,000 banks in this country, plus credit unions, right? Mm-hmm. And now we're less than, excluding credit unions, we're less than 4,000 or coming up on 4,000. The rate of consolidation in the industry is happening for a reason. As technology, AI, for instance, cryptocurrencies are bleeding edge for us, but other technologies have advanced incredibly fast. The rate of customer adoption of certain technologies, banking services, has hit the speed of light, really. We'll have, I think back now when mobile capture of check deposits was advertised. Within days of it being seen on a large bank commercial like Bank of America, our customers were walking in and say, when can I do that? And that, as opposed to ATMs, ancient history that were adopted in the 70s, people took years to get an ATM card. Now they take 30 seconds to get a... So that's the role of banks, is to continue to advance that process. If I'd have sat here 20 years ago and said, my goodness, the rate of adoption on mobile deposit capture is X fast, I wouldn't have guessed it then. So what's the next disruptor in our industry, and how do we adapt to that to meet the financial needs? Because even the fundamental disruptors in banking are more frequent, hard to predict their impact, and they're coming fast, faster than ever. So it's like the treadmill speeding up. So being nimble, being able to meet those needs. Banks, the role they serve is, one, to give back to the communities. That's a key differentiator for all of us. And two, our commodity is fiat currency, is money. Even that's changing today, the cryptocurrency. And what will the disruptors be? So the challenges we face in meeting the financial needs of the community is, how do we adapt to that? How nimble can we be? How fast can we be in adoption, providing that service? So, banking is fundamental to our existence, and we're fortunate to have a system that is they call it the dual banking system, state chartered, federally chartered institutions. We have a very vibrant banking system that's under a lot of pressure, has been for years, with disruption and economic pressures and thinning interest rate margins and things like that. But I think there's big challenges and opportunities. And how we respond to those is what we're doing, is what we do, what we should be able to do for our communities going forward. We've done it over the years. It's just the pace and the degree of disruption is getting faster and faster. I don't know if that answers your question.
No, it sure does. And I'm just going to keep building on it for a second with similar but different subjects. When you talk about banking as a whole, what are the key differences between, say, you brought up Bank of America a second ago, but what are the key differences between the larger entities versus a small, or I'm going to say small community bank like First Seacoast Bank? Maybe you see yourself as medium. I don't know, but you know what I'm saying.
No, on the Richter scale, we are small, 600 million, and give or take in assets. Size is probably, on the small side. I think people would agree with that. We're not the smallest, but we are small. And, the differences are that, the big money center banks have sources of revenue that smaller banks may not have, like trading and things like trading revenue or money center services. They're also subject to a different regulatory regime than we are. But at the end of the day, as far as retail banking goes, there's no, that's one of the challenges and disruptions we face. If a large bank can afford to introduce a new technology that's disruptive to our industry, how does a smaller bank keep up? And I think we've been doing a good job at that. Those challenge, and that's related to what I was talking about earlier. The differences between the two are in some ways profound and in some ways not, in that, again, they offer scope of services, and their business model and delivery systems are designed to meet the needs of the masses or reach the masses. We're probably more focused and targeted than they are. Chase has branches from Dallas, Texas to Dover, New Hampshire, and for physical presence. And I think that's probably the single biggest difference. The feedback we get from our customers, local customers, is that we, as a smaller bank, and we're not the only small bank, but that you could say this about, is that we're more accessible. And I think that's a differentiation. Every bank banking's become commoditized, right? Dealing in currency, loans, deposits, it's a commoditized industry, more so over time. Once upon a time, when I first started in banking, if you wanted a business loan, you had to come in and genuflect at the lender's desk. There was a process. It was a mystery. You put information in a black box, and somebody came back 3 days later and said yes or no. Today, you can get any credit service you want, retail or commercial, deposits or loans, from an app in 30 seconds. So it's a different world today. So leveraging accessibility is probably more important than ever, because Rocket Mortgage is a great service, but you can also get lost in that system or process or technology. So it's us having points of contact, real people like Coralie and Cindy and Tim and John, Paul, Bonnie in our lending areas, that they're real people that you can reach. You can sit down in a branch and talk to them. And so the bigger you get, that more challenging it is to cost effectively deliver those types of services. So that's probably the single biggest difference in an industry that's fast becoming more commoditized by the day, which is unfortunate.
When you started in banking in 1984, you just talked about inputting information into the black box and then, sort of crossing your fingers and hoping for the best a few days later.
Yeah.
But when you started in 84, could you look into the future and foresee a time where we were just so, we've got these apps on our phone, we've got everything at our fingertips? Like, could you see down?
No, I'm not that. You give me too much. I'm not that clever. There were no apps in '84. They were, at least from where I was sitting, you couldn't even see them on the horizon. That's a long time ago. I remember our first PC in the bank was an 8088 dual floppy disk, probably no resonant memory in it, and we had a log where we had to sign in to use it, to take turns using it, one PC. And there was once upon a time, and I'm really going to date myself, where the backroom staff, the branch staff, would fill in ledger cards for every customer's deposit account during the month. So when they posted the interest, they would have those balances when they came in to update their passbook. So banking was done manually back then. So seeing apps on iPhones and Samsungs was not. I was by no means a visionary, for sure.
Does this blow your mind that's where we're at?
It does, and you take it for granted. And again, Look at the speed of adoption, right?
Yeah.
This iPhone is probably. And this is an iPhone 12, 13, something like that. It's dated already, but that's probably more horsepower than the entire bank had in 1984.
Yeah, it's kind of wild to think about. Yeah.
It is wild to think about that. Yeah.
We're taking a quick pause to bring you What's in Your Wallet. Jim, this next segment is called What's in Your Wallet.
Right.
So what's something either serious or silly that you have in your wallet? Could be an app on your phone, just something that you carry around with you that, either informs or inspires your day-to-day, or not. Just what's in your wallet?
No, that's a good question, Chris. Let me think on that for a minute. It's pretty cool. I'll mention two. One related to my son, who's a pilot at Dias Air Force Base out in Abilene. He's a B-1 pilot, and he was deployed overseas. They went to, I think that was Fairford, England, or Trondheim, Norway. I forget which deployment. They had a bunch of jets over there. On their way back, they stopped over at Pease, and so we went down to see him, and the Pease greeters were there, and one of the gentlemen from the Pease greeter came out with this small wrapped gold star with a small piece of a U.S. flag in it, and gave it to me. He says, and he gave one to my son Joe and I when we were talking with him, and it was like a little acknowledgement, thanking him for service, and to my wife and I for having a son who's in the Air Force. So that's pretty cool.
That's very cool.
And then let's see what else was in my wallet that I wanted to. Oh, on my phone though, the only app that matters is that one, which is Arsenal, and. Had to get the sports in, is Premier League soccer. I'm an addict.
Nice.
Yeah.
Do you do fantasy soccer? Do you manage a team?
I don't. No. I'll give you my theory on fantasy football.
Sure.
If you look at it, why is attendance down at NFL games? It's because of fantasy football. Because you're not rooting for your team, you're rooting for a person. So when I was in my fantasy football league, I had to stop because I was mentally scattered. My allegiances were scattered. I wanted the running back for Philly to have a great day because he was on my team, and I don't like Philly.
It's funny you say that. I can remember years ago, my best friend and I went to a Patriots game. We're both pretty large human beings wearing our Vince Wilfork jerseys. And they were playing the Dolphins. The time their running back was Ronnie Brown, and he scored 6 touchdowns against the Patriots. My best pal's name, also Chris, had Ronnie Brown on his fantasy team, so he's losing his mind that his fantasy running back
is killing the
scoring
Patriots.
all these touchdowns, and people are looking at us like, what is up with these guys? They're wearing Wilfork jerseys, but they seem to be cheering. I wasn't. He seems to be cheering for the opposing team's running back.
And that's my knock on fantasy. But the other thing too is that I had my wallet, and it's again, I took it out because my wallet was I had issues with it falling apart actually. You can see the moths come out when I open it, but it was a Tom Hanks movie where there was a fortune teller, one of those automated ones.
Remember
that?
Yeah.
So I was in Flagstaff, Arizona, about 10 years ago. And my daughter was with me, and I pulled one out. I put in a quarter and got one of those little tarot card things.
It was they're like a fortune card type thing.
Yeah, fortune teller thing.
Yeah.
And I read it, and I said, wow, that's pretty cool. And that's been in my wallet the whole time, too. My daughter thought that was cool because it was like the Tom Hanks movie.
Love it.
Yeah.
All right, Jim. So it's good stuff talking about how sort of technology has changed over the course of your career. On the flip side, what hasn't changed over the last 4 decades that you spent in banking?
Yeah, we talked about the delivery models, similarities and differences from large banks and small banks. And one of the things is access to people and customer relationships. Is that it sounds corny, but at the end of the day, when you need a relationship to leverage a relationship in banking, you need it. I mean, my kids are fond of saying, "Well, Dad, I haven't been in a bank lobby in 10 years, except when I," and it's the except when I needed to talk to somebody about X, Y, and Z, and that's what we're here for. So, it's one of these things you don't know what you need until you need it in that case. And so our ability to support customers through challenges, exploit opportunities, things like that to help them do that or leverage opportunities is what we do best. Every bank, large and small, has good people. Mm-hmm. We have good people too, but we have good people that are readily accessible. So I mentioned our lenders earlier, our branch people. I can honestly say, and this isn't to blow any smoke at anybody, but our branch crew in our 5 branch facilities are the best branch people I've ever worked with in my banking career. And I'm not saying that just because I'm hoping they'll buy me lunch today, but they're very nice people and very good at what they do. So,
are the people what drew you to work for a place like First Seacoast Bank versus a bigger entity, or can you talk a little bit more about that?
There's that and the variety. I think one of the things you get to do as an employee of a smaller bank is you get to touch a lot of things. I was involved in things. The bank I started with up in the North Country ended up buying another bank, buying some branches, as back in the day, some of the large banks, as they consolidated in the late 80s and early 90s, had to divest some branches. And so we expanded from a small North Country bank to a bank with a statewide bank, pretty much with, probably 23, 24 locations by acquiring. And so I get to participate in the contract and the purchases and the setup of all of that because I was at a small institution and I wouldn't have been able to do that. And you get to know your customers. For me to go to work for a large, money center bank and sit in a cubicle in wherever, Boston or New York or Charlotte or Atlanta, Chicago is not what I would like to do. I think the variety of what we do, the engagement with the people, it's a good lifestyle for all of us. in banking. I mean, we're in an institutionalized industry, if you will, and so the quality of life is good, and the bonus on that is the people and the variety of work. So it's rewarding, no question. It's kind of too bad young people today don't think of banking as a career, or they think of investment banking, and I don't blame them, because that's where maybe the fun and the variety is on an individualized basis. But it's successful careers or self-actualization is really about an individual goal. It's a group setting. So if you're not happy at work, you're probably not happy, period. And so this is, banking's been good to me and my family, and I've met some great people and learned a lot along the way, for sure. Yeah.
Did you go to school for banking or
business administration? Yeah. So actually, I have. I mentioned my storied college career. I have an associate's degree in business administration from White Mountains Community College. I have a bachelor's degree from Granite State in business administration with a concentration in strategic planning, and then I have a master's and MBA from UNH. So I've touched a lot, and I went to Plymouth through that too. I went 1 year full time at Plymouth State University. So I've touched most schools in the state, one way or the other.
Nice. Jim, earlier you talked about going through a rebranding process at one point in your career. So can you walk us through what that rebrand was like from going from Federal Savings Bank to First Seacoast Bank?
Sure, that was quite a process. We had been, we were originally founded 135 years ago in Dover, and we were originally known as Dover Federal Savings and Loan Association. Then over the years we became Dover Federal, and then locals refer to us as just Dover Fed over the years. And then in I want to say in the 70s we became Federal Savings Bank. That's generic, too generic in our mind. And so if you combine a generic name like Federal Savings Bank, and your population is changing, we've seen in the turnover demographically is, while if you banked with us in 1970, you knew who Dover Fed or Federal Savings Bank was. But if you came into town, you'd come to our main office or drive by our main office, which unfortunately the siding is Tridentine marble, literally from Italy. That if anybody wants some Tridentine marble, I have it for sale if you want it. But you'd come in and you'd apply for Social Security. You thought we were a government building, way too stoic, way too institutional. So we started to think of ways to refresh the brand. Of course, we were successful with the generic brand. But we could see we could see things potentially changing with respect to the local demographics. So we wanted to get something new, something not flashy, but something that wasn't so generic that you get blended into the government institutionalized setting. And so we hired Market Street out of the Cape. They were a marketing firm, and they came in and they helped us. And Tiffany and the marketing crew did a great job. I would say, in my experience, banks don't like to mess with success when it comes to branding. And so you can go from a hero to a zero in a hurry if you make a mistake. I don't think Tiffany and those guys did. I think the proof is in the pudding, is because it feels like we've always been First Seacoast Bank. But so when they came in, we looked at a lot of alternatives. One of the, and this is kind of hokey, but when we were Federal Savings Bank, people referred to us as a FSB, and we're still FSB as First Seacoast Bank. So that worked out very well. But I don't think in all my chamber events, other fundraising events in the community, serving on a hospital board, meeting a lot of people, that I had one complaint about the name change, not one. And the Seacoast theme branding in terms of colors, designs, graphics that Tiffany in the marketing department has been exceptional. It's just, our cover to our annual financial report that we put out every year, I get calls from investors or from customers that say that's, it's great. Who does your artwork? And we do it internally. It's great. So it's very happy with that, and it's worked out well for us. Yeah. Yeah,
it seems to definitely more seamlessly tie you to the fabric of the geographic area that you're in.
It is. That's always tricky with banks. If there's a name of a community in your bank name, but yet you expand to another area, or that particular area of a region may have a reputation, positive, negative, or indifferent. So how does that work? I think it carries less weight than we fear it does. I think we're more afraid of changing brands in banking than we should be as an industry, but it's worked out pretty well for us.
Thanks for tuning into this episode of Bank On It, Conversations with First Seacoast Bank. I'd like to thank my guest, Jim Brannen, for giving us a look into his role as First Seacoast Bank's CEO and how community banks have shifted over his years serving in the financial industry. Join us for our next episode, which will be part 2 of this series, which continues our conversation on the topic of community banks in these contemporary times. First Seacoast Bank is member FDIC, equal housing lender. For more information, visit www.firstseacoastbank.com.